Welcome back everyone, and in this video, we're going to go over the top 5 high growth ETFs to take a look at in 2021. All 5 of these funds have absolutely exploded over the past few years, and that high growth is only expected to continue for many years in the future. These funds are investing in some of the most innovative companies all across the world, and as a whole, each of these ETFs is focused on a different sector of the market. So picking 1, 2, or all 5 of these funds will give you a nice diversified portfolio of potentially high growth companies for many years in the future. If you're new to the channel, I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy and sell, and discussing any major market news or headlines. So please hit the like button, subscribe to the channel for daily videos about the stock market, and today we're going to go over the top 5 high growth ETFs to add to your portfolio in 2021. And the first fund that we're going to take a look at today is ARK's Innovation ETF. This is ticker ARKK, and it has grown by 174% over the past 12 months. In no way is this a surprise. ARK Invest has been growing in popularity, and billions of dollars are flooding into their funds. And ARKK has seen such an influx of capital that it is now the largest actively managed ETF on the market. And of course, a ton of investors want to get the returns that ARK has been posting, which have been absolutely crushing the market over the past 5 years. And now ARKK is the largest actively managed fund in the world, and it has been performing amazing. So this fund is focused on disruptive innovation, and they buy companies who are planning to change the way we live our daily lives. These are some of the most innovative companies in the world in various different sectors, but one thing they have in common is that every single company in this ETF is working on an innovation or an improvement to how we conduct our lives every single day. And this fund is so large, it currently has net assets of over $17 billion. And one thing I want to mention is that all of the funds in today's video do come with medium expense ratios between 0.5 and 1%. All of ARK's funds come in at a 0.75%, and when you want an actively managed higher growth fund, you are going to have to pay a price. In no way are these going to be as cheap as a simple S&P 500 index fund. But if we take a look at ARK's performance, we can understand the hype and the popularity that they've been seeing over the past few months. So as of year-end 2020, this is the annualized performance for ARKK. Over the past year, it has grown 152%. Averaged over the past 3 years, it is up 52% per year. And over the past 5 years, the fund has grown at an average of 45% per year, which is absolutely insane. And since the fund's inception, it has grown 36% averaged over that time frame. So this ETF has grossly outperformed the S&P 500 since it was first created, and analysts are predicting that Cathie Wood and her team at ARK Invest may be the new fund manager that can outperform the market over a longer term perspective as well. And if we take a look at the top holdings in ARKK, coming in at number 1, we have Tesla, making up around 9% of the fund, Roku at around 7.5%, CRISPR Therapeutics, Teladoc, and Square round out the top 5. And as you can see, every single company on this list is extremely innovative. They're all doing something that's going to change the way we conduct our everyday lives, whether it's in the health sector, the tech sector, the electric vehicle sector, the entertainment sector like Roku. Every single company is going to change or impact the way we conduct our everyday living, and that is why they are focused on disruptive innovation and part of this fast-growing ETF. So ARK Invest has grown tremendously over the past year. They have a suite of around 5 ETFs that have all grown by more than 100% over the past year. But we're going to focus on ARKK today. This is their flagship fund. It is the largest actively managed fund in the world, and I understand why. So definitely take a look at this company. It has seen an influx of capital over the past few months, and as a whole, ARK is predicted to grow over the long term at a very fast rate. But now if we jump over to the second ETF in today's video, we have ticker PBD, which is Invesco Global Clean Energy Portfolio ETF, and it has grown by 154% over the trailing 12 months. This fund as a whole is focused on clean energy, and that sector of the market is only expected to expand by more than 50% in the next 5 years. And with the new president administration who is going to focus on clean energy, this may be a great fund for the next few years in the future. And this ETF is focused on companies working towards the advancement of cleaner energy and conservation. And the entire trend of clean energy has really been growing over the past few years. And if we take a look, the market price of this ETF year to date at the year end of 2020 grew by 145%. And over the past 5 years, the fund has grown by 27% per year, which is absolutely incredible. And as clean energy continues to grow in popularity and we transition more of our economy on clean energy, the companies within this fund are expected to grow at a massive rate. And if we take a look at the sector allocations, 38% of this fund is in industrials, 25% utilities, and 19.6% in information technology. And for most people, they don't really invest in industrials and utilities in their high growth portfolios. So getting into these sectors really can round out some nice sector allocations. 28% of these funds are from the United States, and the next highest country is China with around 13%. And coming in at third is Canada with just under 10% allocation in this ETF. And if we take a look at the top companies, we have Rene Solar, Lithium Americas Corp, Plug Power, Fuel Cell Energy, and EOS Energy Enterprises. And you can see the top weighting in this fund only makes up 2.5% of the total ETF. And I love that. What that means is your money is diversified across a ton of different companies in this fast growing sector. And I personally prefer this diversified allocation much more than an ETF where 50 to 70% of the total funds are within the top 10 holdings. Because in that case, I'd rather just buy the top 10 holdings individually and not pay the annual fee of holding the ETF. But in this case, you're getting exposure to so many different companies that you really isn't worth it buying individually. So this ETF allows you to have so much diversity across the world in many different sectors, and I like it for a clean energy play. So definitely a trend to take a look at. I think clean energy is here to stay, and this may be one of the best performing ETFs on the market in 2021 and beyond. And now we're going to move on to the third ETF in today's video, which is O-Shares Global Internet Giants ETF. Ticker OGIG, currently trades around $58 per share and has grown by more than 104% over the past year. So this is a fund that invests in some of the largest internet and e-commerce companies all across the world. It owns over 60 high-quality global internet giants, and we all know the internet and e-commerce is the future of our society. And if we take a look at their performance, since the fund's inception, it is averaging 35% per year, which is absolutely insane. And if we take a look at the top holdings, we have companies like Amazon, Alibaba, Tencent, Google, Facebook, Microsoft, and many more of the leaders in the e-commerce and internet space from all across the globe. And if we take a look at the country diversification, 61% from the United States, 21% from China, over 7% from Germany, 2% from Canada, United Kingdom, and a lot of other countries make up the rest of the overall portfolio. If we take a look at the different sectors in this fund, 38% of information technology, 31% of consumer discretionary, and 30% in communication services. So of course, this is a highly focused ETF on internet and e-commerce companies, but as a whole, these are some of the largest companies in the world that have absolutely exploded over the past few years. Just taking a look, Amazon runs the e-commerce world. Google is one of the largest tech and most dominant companies on the planet. Facebook, the largest social media play. Microsoft, a leader in the tech, hardware, and software space as well. So these companies are extremely large. These are a lot of large cap plays that dominate the tech industry and are expected to do so for many years in the future. And this ETF is actually run, and the chairman of it is Kevin O'Leary from Shark Tank. So if you like Shark Tank, you like Kevin O'Leary, you like his financial mindset, definitely take a look at this fund, and the expense ratio is 0.48%. So like I mentioned, these funds are more expensive than a traditional S&P 500 ETF, but if you want that more focused growth, if you want to get that diversity into a specific sector of the market, you're going to have to pay a higher price, and that just comes with the game. A lot of these funds are actively managed, so the higher fee is used to pay all the staff who run these funds on a daily basis. But now if we continue on with the video and jump into the fourth high growth ETF to take a look at this year, we have ticker LIT or LIT. This is the Global Lithium and Battery Tech ETF, which currently trades at around $71 per share and is up close to 135% over the past year, which is absolutely insane. And if we take a look at ticker LIT, this is a global lithium and battery ETF, and they invest in the full lithium cycle from mining and refining the metal through the battery production process. And overall, it's expected to grow at a huge rate as battery technology takes off for many years in the future. And right now, this fund is invested in 41 different equities and has assets under management of over $2 billion. And the total expense ratio for this ETF is 0.75%, which is matching ARK Invest's ratio. And if we take a look at the historical performance, over the past 5 years, it is averaging more than 27% per year growth, which is absolutely incredible. And as time goes on and the focus on clean energy, electric vehicles, and battery technology only expands in innovation, this ETF is really expected to take off for many years in the future. The top 10 holdings of this fund are Albemarle Corp, Ganfeng Lithium Co., Tesla, of course, at 5% of the total ETF, Contemporary A, BYD Co., Samsung, and many more. Of course, some other massive companies like Panasonic also make the top 10. And if we take a look at the sector breakdown, 43% is materials. And that's huge. If you're a simple investor in the S&P 500, materials is the smallest sector of the overall S&P 500. But this fund, it is actually the largest, coming in at more than 43%. So if you want some diversity away from a simple S&P 500 index fund and into smaller sectors of the overall market, definitely take a look at LIT. 43% in materials, 29% in industrials, and consumer discretionary makes up around 15% of the overall ETF. And the fund is also globally diversified. 44% come from China, 21% from the United States, and over 11% from South Korea. So another fund that's taken off over the past year with a lot of future growth expectations for the future. And now we're finally jumping over to the fifth ETF in today's video, which is ticker IBUY or iBuy. And this is Amplify Online Retail ETF, which has grown by 128% over the past year, which is absolutely insane as well. And our world is changing. The pandemic has shut down physical retailer, and online ETF and online retail shopping is growing in popularity. And three things to consider when investing in this ETF is that US online sales continue to grow at a massive rate, averaging 20% annual growth over the past 2 decades. And the estimated growth rate moving forward is 25% worldwide, which is absolutely insane. And this ETF is focused on companies who generate a significant amount of their revenue from online and virtual retail sales. And if we take a look to be included in this ETF, you have to be a company with at least 70% of your revenue or a minimum of 100 billion in annual retail sales derived from online or virtual platforms. That's incredible. These companies have to have 70+% of their revenue or generate 100 billion in annual retail sales derived from online or virtual sales to be part of this ETF. Right now, it holds around 58 different companies, and the expense ratio is 0.65%, so slightly cheaper than ARK's funds. The top 5 companies in this ETF, of course, are United States, making up a majority at over 76%. China and Germany round out the top 3. A majority of this funds, or 2/3, is made up of large cap companies, mid cap around 22%, and small cap funds only make up 14% of this overall ETF. And now if we take a look at some of the top holdings in this ETF, you can see they own brands like Groupon, Lyft, TripAdvisor, Etsy, which is one of the fastest growing e-commerce marketplaces in the world. We have Expedia, Booking Holdings, Netflix, Chegg, Carvana, PayPal, Uber, 1-800-Flowers. So many of the best and top and brightest online retailers are in the top 20 holdings in this ETF. And again, I like ETFs who are nicely diversified and are not top heavy. So you can see the largest fund in this ETF is only 3.6% of the total weight, which in my personal opinion is a great sign. And if we take a look at the historical performance on an annualized basis, since its inception in 2016, this fund has grown by more than 38% per year. And over the past 3 years, it is averaging over 41% per year growth, which is absolutely insane. So the market averages anywhere between 8 to 10% per year. Of course, there are a ton of fluctuations, but companies and solely high-focused ETFs focus on nice themes and individual marketplace trends can perform and actually outperform the market by a significant rate if that trend is successful over the next 5 years in the future. So definitely take a look at the online retail ETF, ticker IBUY, if you want to get into this space. So those were 5 high growth ETFs to take a look at right now for 2021. If you want to invest in more specific themes in the market, definitely take a look at the companies we already went over. ARK's Innovation ETF has been incredible and is now the largest actively managed fund in the world. We saw a clean energy ETF, an internet giant ETF, the online shopping ETF, and a lithium and battery fund as well. So a ton of different diversity. We have companies in sectors from all across the world. So definitely take a look at one of these top 5 high growth ETFs for your portfolio if you want a more specific, high density investment strategy for 2021 and beyond. So thank you for watching, everyone. I am the Gen Z Investor, and see you in tomorrow's video.